Well, to kick us off tonight, we'll welcome our first guest, Ryan Mee, the CEO of Fulcrum Metals. Good evening, Ryan. How are you doing? I actually can't hear you, Ryan. You may have muted yourself.
Technology, eh?
There we go.
Good evening, Mark. It's always a pleasure being in the studio with you, and then thanks to everyone for tuning in.
Yeah, good to be catching up, and of course it's timely. You know, you're into gold. You're not quite yet producing, but that's the aim of the game for Fulcrum. Turning waste into gold, I think, is the slogan, isn't it? And of course, gold doing very well. So you take quite a different approach to many junior resources firms in that you focus pretty much all of your efforts now on unlocking the potential from the historic tailings in the Kirkland Lake area, and that's of course with your projects Hughes and Sylvanite. So first of all, could you perhaps just introduce these two projects and why you see the tailings opportunity having such economic potential for you?
Yeah, sure. So Hughes and Sylvanite, they're located along the Kirkland main break. It's actually where there were 7 mines. It mined the same ore body, produced over 24 million ounces of gold. So, that started back in the 1920s to the late 1960s. So you can as you can imagine, there's quite a lot of mine waste in and around those areas, and these two tailings bodies are essentially from 2 of those mines. Tech estimated to have around 6 million tons, growing about 0.66 grams a ton, and Sylvanite just over 4 million tons at I think it's 0.47 grams a ton. Now, what we have to remember is that in the current climate, all these new mines that we're seeing in Canada are around 1 gram or less. So and that's if we look at the gold price now, that obviously means these lower grades are a lot more economical. The reason why we're excited about tailings is that tailings is already mined. It's already been, discovered. It's been shafts have been developed and it's been blasted and brought to surface. So this is already mined. The fine tailings. It's sat at surface. We know exactly where it is. And what we're actually doing at the moment is proving a concept with a new leaching technology, which so far we've proved that we can double the grade of gold that's recovered from the tailings in a much quicker time. So we're getting more gold out through the process, and we can do it quicker, which obviously has direct consequences of costs. So we're looking to develop a concept here of a low-cost production opportunity, which is a near-term opportunity. We don't need to discover these tailings. We need to extract them, and that's what our work is focused on at the moment.
And why has no one else tried to reprocess these tailings here then, if it's so easy as you make it out to be?
Well, firstly, without the right technology, these tailings are not commercial. So people have looked at these tailings before. They've used cyanide-based methods. They were only able to recover 30% of the gold in it over leach times of 48 hours. What we've proved with the technology that we're using is that we, even on an unoptimized basis, that we can recover up to 60% of the gold in as little as 3 hours. So we really are hitting the right notes to develop an economically viable concept here, and that's exactly what as I say, that's what we're doing at Tech, to actually not just prove the technology works, but deliver a concept. And we've got multiple work streams ongoing at the moment to deliver that.
Well, this was what you just said really backed up, I think, in your December press release there, where I think you released an update saying that you've got the increase in gold recoveries up to 63% at Sylvanite, as well as the significant reduction in the leach times here then. So, I mean, it all sort of hinges, you say it's not economical unless you've got the technology. So, I mean, how do you prove that technology works?
Well, in short, we have, Mark. As I say, cyanide-based leaching methods 30% recovery. The reason for that is it's refractory. The technology that we're using, which is our partner Extract, based up in Kentucky in the US, we've shown that even on, and when I say unoptimized, this leaching technology, if I just go back a little bit, these tailings have been sat there for 60 years. There's very little metallurgical work that has been undertaken on these properties. So really, from a cold start, we've came in with the technology, and from the first pass, really, we've got nearly 60% gold recoveries. You mentioned the news release that we put out in December for Sylvanite. That was a 63% increase in the gold recoveries. But if we look at the work that we've done on tech, we've shown that we're going from 30% recovery up to nearly 60%. So that's nearly double. And there is we've got a robust program there to optimize this technology. It's a 4-phase program. The first one is the high level unoptimized leach testing, which we have done. As I say, really we're focusing on tech to build and deliver the concept. So we completed phase 1, which is right. We've got 60% gold recoveries in as little as three hours time. So that's nearly double the recovery of gold and over 90% reduction in the leach times. The phase 2, which we're doing at the moment, is the initial conceptual study. That's going to give us a lot of information with regards to the operating costs and the capex costs to the project. And that will then lead on to a detailed optimization study, which we should be doing over the summer months. And that's where we really optimize that by adjusting the parameters of the leaching reagents, and also have a look at can we further maximize or minimize, should I say, the leaching times. So we're kind of coming in from both angles, and that is, can we get more gold out of this, but also can we do it quicker and therefore cheaper?
And how is that phase 2 progressing then? Because you've completed phase 1 all as in time and all went well. Where are you at in phase 2?
Yeah, so we put out in one of our most recent RNSs that we should have this phase 2 completed by the end of H1. But we are making excellent progress, so we hope to have that out much earlier than that. But obviously, I need to stick to our publicly available timelines. But we're advancing as quick as we can, and we try to deliver ahead of expectations on that mark.
Okay, and I mean, just thinking of the risk here, could it be a go or simply a no go? Is there a risk that these results come back from phase 2 or even phase 3, and it's like, actually, no, we can't do this as we thought?
Well, look, we've got all the odds stacked in our favor. We're not mining, we're extracting. So we're cutting out half, if not 2/3 of the cost of producing gold from the tailings as opposed to a mine. We've got a gold environment, which, since we focused on tailings, has pushed up from just under $2,000 an ounce to $2,900 an ounce. So we're pretty happy with that going into this, that we're going to have a low-cost operation, and if the gold price keeps going up, it's going to be very lucrative for us.
Indeed. And all of that element then is with the partner here. That's sort of out of your hands. I know you're doing other work in the meantime, which I'll talk about in a moment, but is it really over to Extract, and presumably we're in sort of regular contact, but really it's in their court at the minute?
Extract are our technology partner. Extract also have a partnership with Bechtel Engineering. So as part of this phase 2, the collective partners that we have are working on this phase 2, and importantly, we're going to be using live prices for equipment. So it's not going to be prices of equipment from 2 years ago, which will be out of date. But of course, we need to make sure, the whole point of us having these partnerships with such well-established companies, Extract, it's a company born out of the Reynolds family, which is one of the most wealthy families in the US, and Bechtel Engineering, which are one of the major and successful engineering companies in the world. And if Bechtel say this technology work, then I think people should stand up and take notes. Obviously, these are private companies, so I'm limited what I can say in the public market, other than the news releases that we do put out. But investors and participants in the market that are looking at what we're doing, saying, "Oh, I'd like to know a bit more about the technology." Obviously, that will come in due course with the phase 2 study. But you need to have a look at the partners that we're aligned with here, and realize that actually, you know what? If companies of these magnitude are telling us it works, then maybe it just does.
And not just the partners as well, but I think you've also got quite a lot of interest from the Ontario government, have you? Mines Department. I know when we met in Resourcing Tomorrow, we did an interview with George Pirrie there. I know you sort of know him fairly well, don't you? You've got quite a lot of interest from that side as well.
Yeah, well, from the very start, when we started looking at these tailings, which I think was November 23, maybe. We started that engagement with the local and regional mines departments, with indigenous communities. So we've been bringing everybody, all these stakeholders along with us on this journey. As you pointed out earlier, we're making an early move in reprocessing tailings, which it actually has quite significant benefits other than the production of gold. These tailing sites, they've been sat there for 60 years. They have obviously have gold and associated elements which has polluted those areas. And we get the opportunity, we're delivering a concept here whereby we can go out there, extract the gold, clean these areas up, and we can help that process of bringing these lands back to the community. We're actually addressing two of the key UN sustainability goals here. In the first instance, decarbonisation of all supply streams. Just by the very nature that we're reprocessing rather than mining, we've got a very low carbon footprint because we're not mining. And secondly, as I just said, that we're looking to help reclaim these lands. It's increasing biodiversity. So we're addressing some really important issues. In addition to our investors and stakeholders, within the business who are more focused on the gold.
Okay. And in terms of what's to come then, in terms of milestones that investors can look out for, so you've said sort of H2, just the start of H2 for that phase 2 to be completed and announced to market. But I know in the interim you're actually you're looking to get up a technical report, I think, at Hughes, and also a resource statement, which is why you've been going out there in the snow and sort of taking auger samples. So is that what you want to do in the interim, sort of between now and H2, get it out in Q2, maybe a bit of a resource statement? What else is going on?
Yeah, so I think there's three important things which we're working on at the moment, which is obviously in the most recent RNS operational update. The first one is, actually there's four. One is the work that we're conducting towards the 43-101. That's going to include, the first compliant maiden resource. That's why we was out in Kirkland Lake in January in the -20 or so temperatures, which was delightful. And we should start getting some assay results through from that soon enough. The second one is the phase 2 conceptual study. It's a very important study to the company. And I say we're making excellent progress on that. And the work from the phase 2 feeds into what we are working on with Extract, and that is a master licensing agreement, which will cover all of the Timmins townships and also the Kirkland Lake across Larder Lake up to the Quebec border. So that will give us a very concentrated area for us to work on. There's so many tailings in those areas. We could be working there for a hell of a long time. And it gives us, that early adoption. It gives us a bit of security in the work that we're doing now. So, we're going to see a return on the efforts over the last 12 to 18 months. Yeah, I'm really excited about delivering these 3 or 4 really important items of news for shareholders.
Good. Well, thank you, Ryan. So we are coming on to the time to go over some questions from our audience, your investors, potential investors, hopefully. So I see one that came in quite early on here. So good evening, Ryan. When do you think we will be in production with gold closing in on $3,000? It looks like a gift.
Well, essentially what we're targeting is to have the concept completely built out by the end of this year, so we're construction ready. What we're doing alongside this work is, there's some important environmental work that needs to be done also. So really it all depends on how long the environmental work takes. That might be 12 months or 15 months. What our ambition is that by the end of 2027, we're at nameplate capacity in terms of production, for the Hughes project. And we're looking at a variety of tons per day as part of our phase 2, 1,000, 1,500, 2,000 tons. So I think people can work out the gold price, the tons, and the gold grades that I stated earlier to recognise that this is an operation which can deliver some significant revenue to the company, which 18, 24 months. So I think that's it puts us in a great stand.
Yeah, okay. I know you're probably being a little bit careful what you say. That it's always very difficult to set expectations, but I think you did, in 2027. I won't hold you to any of these deadlines. I know your investors will, but hopefully you've been pessimistic rather than optimistic. But it's good to get an idea. Anyway, Ryan, it's good to get an idea. So another question that's come in here, it looks like, is Fulcrum looking to add any other gold tailings opportunities in Ontario to its portfolio?
Well, look, what our ambition is to be able to bring, a new project online every 12 months once we've got tech up and running. We have had, other companies come to us asking whether we want to have a look at their tailings. Obviously, currently we're just concentrating delivering this concept at tech, and obviously, as I say, we're also focused on getting executing this master license agreement with Extract over to the biggest gold camps in Canada, in Timmins and Kirkland Lake. So naturally, that's going to give us a very keen commercial advantage in how we go about not just sourcing but executing new opportunities for gold tailings. So we're always looking for the right deal, and it just needs to fit within the parameters of what we're doing.
Yeah, okay. I like that, like what you said. So that, in theory, if it all works at Hughes, you will look to effectively keep rolling and processing different tailings projects throughout Ontario.
Absolutely, that is the plan. A bit of organic growth in there, and as I say, we're an early adopter of the technology. We're an early mover in the space for tailings reprocessing, and people are starting to recognise the opportunity. You've seen the deal with Discovery Silver in Timmins just the other week, $400 million deal. They're focusing on reprocessing the tailings as their first move as part of that. And as I say, we've had a lot of interest from different parties in terms of participation in other tailings projects or other kind of collaboration opportunities.
Okay, good. Another question I can see popped up. Do you expect to see rising gold prices increase buying of shares in extraction-focused natural resources companies like Fulcrum?
Do you know, I think it's more than just the price of gold. Obviously, the price of gold helps because let's face it, reprocessing tailings is a lot quicker to revenue generation than developing a new mine. But it's not only just cheaper, but it's quicker to do that. But there's a huge potential in tailings. There's been estimated over $10 billion worth of precious metals in Canadian mine waste alone. And what you've seen in Ontario, from the 1st of July this year, there's going to be a new fast track process for recovering minerals from historic mine waste sites like we have. Because the government recognizes not just the opportunity from the mineral wealth side of things, but also what this can do for local communities and local environments. As I say, touching on increased biodiversity through reprocessing and reclamation. So I actually think that it's not just about the gold; it's actually about what the concept delivers, and that is a better environment for all of those stakeholders, whether it be government or local communities.
Good. Well, that's good to hear, Ryan. So I can see some more questions. We have to get through them. We're running out of time. The main focus is tailings to draw in revenue, but are you advancing the Tully Gold and Big Bear projects this year, considering they are both drill-ready projects?
No, great question. I really like these two projects. We simply focused on tailings because of that nearer term revenue generation. Look, we're looking, we're reviewing opportunities to, bring, other partners to the table on that, so that we can get the drill rigs out there and get some exploration going on these properties. You know, Big Bear sat there waiting for a discovery. We've drilled the drill targets. Tully, it's in Timmins. Timmins has produced, over 80 million ounces of gold. It's within 30 kilometers of some of the biggest gold mines in Canada, like Dome, Harlinger. These are 15, 20 million ounce gold deposits. So, there's a huge opportunity there at Tully for resource expansion and developing a mine there. So, really excited about that too.
Okay, and can you just keep those projects sort of in the portfolio? Do you have to spend some money to keep the license active?
You do, yes. I mean, the majority, Tully, is very, very minimal holding costs. It's like, $1,000 a year.
Okay.
That's because most of it's held by license. Big Bear, there's a higher spend on that, but we've got some accumulated work expenditures on that, which will keep it in good standing for a good while. But we don't want to see these projects standing still, so we're having a look, at different
Okay.
possibilities for these properties to bring some value, which I don't think is, I think if you look at the tailings and the projects we got, it's just not built into our share price.
Okay. Good. Okay, I know we have some other questions here, so let's see if we can get that up. Can you provide an update on the gold and uranium exploration assets? So we've talked a little bit about the other projects there. So maybe the uranium, because that was quite a big one, wasn't it? But you've sort of shifted it on, but you still hold, you still stand to benefit from it.
Yeah, so the uranium, projects in Saskatchewan, they're a really, really good portfolio actually of uranium assets. Some high grade uranium that we found there. We were fortunate enough to option those properties out to Terra Volcanica, listed over in Canada last July. Now, over the option term, that'll see about 3.3 million Canadian in cash and shares. So that's realising some exceptional value for shareholders. Fulcrum retain a 1% NSR, over that portfolio too. So I'm obviously always in dialogue with Terra to see what they're up to. I think they're a great company, a great partner for us, and I think the they're about to go out and drill some silver and antimony targets, and once they're done there, they'll be getting out in the field to move these uranium projects along. So we should see some news flow on that shortly. And obviously, we just touched on, the gold projects or gold exploration projects in Ontario. So
yeah, exactly. No, good. Two come up very well. I think you can't be any. Maybe you want to add copper to the portfolio. That's the only other one that's doing well. But uranium and
interesting facts. We focused on the gold at Big Bear, but we're very well aware that holds, base metal prospectivity. We know there's zinc up to 19%. There's been copper on there reported 4.5%. So it's Big Bear's offers many different upsides for exploration on that property, and gold, being the main focus at the moment. But so maybe we do have a bit of copper in there.
Maybe. Well, we've got just a couple of minutes left, so let's. We were talking about this before we came on air. The gold price targets before year end. And yeah, you have a bit of a theory, don't you? Actually, yeah, it was quite interesting. You talk about the sort of cycle it'll go through. Maybe you want to share it here.
Yeah, I think you're going to see a number of cycles, but ultimately it's going to remain in an uptrend. I think we have entered a bull cycle. We're probably a couple of years into that now. It looks like it will be a strong bull cycle, so perhaps another 5 or 6 years to go on that. But of course, nothing goes up in a straight line. I know we all wish it did, but it doesn't happen. So I expect, what's it trading today? 29.30, something like that. I think it'll go maybe 3,100, retrace, 27, 2,800. And what that will do is it will build a new base to go higher. I expect it to go up to in the region of 3,500. Whether it remains there by the end of this year, we'll have to find out. But I'll be very surprised if the gold price does not begin with a 3 by the end of this year.
Okay, good. I like that, Ryan. I like that. So I think one other question has come in just before we finish here. JT again, could you expand on the tailings opportunity that's in Ontario alone? Should you get a licensing agreement over the line? Okay, so should you get the licensing agreement over the line? Oh, expand on it. Okay. Well, I think we probably covered it, but maybe you want to have the final words on the tailings opportunity.
Yeah. So okay, I guess what I'll do is I'll focus on the exclusivity area that we're working on executing. Now that covers all of the Timmins townships. It also covers Kirkland Lake, Larder Lake, as I said earlier, up to the Quebec border. Now, these are two of Canada's biggest gold camps, two of the most important gold camps globally, in some people's opinion. And what we do know is that, that's about 3,800 square kilometers of prime gold tailings estate, with, a mining history that goes back to the 1920s. And we know there's at least 70 historic or legacy mine sites, within those areas. So there's a lot of work ahead of us, and it gives us it will give us a fantastic platform from which to develop Fulcrum, and those opportunities.
Okay, excellent. Well, thank you very much, Ryan, for your time. We're bang on time here. So looking forward, of course, to following updates through Q1 and, of course, as we head to the end of the first half. You can stick around, I hope, so we can come back at the end in about an hour's time to have a bit of a general chinwag on gold and everything that's going on with that. But thank you very much. You can take a break, and